Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dryden Gold, an exploration company focused on the discovery of high grade gold mineralization with a 100% interest in a dominant strategic land position in the Dryden district of northwestern Ontario. It's Trey Wasser. Great to have you back on the show.
Thanks, Jesse. Always great to be here.
Yes, I want to start by getting your take on the main trends and themes you're currently watching when it comes to gold and maybe more specifically the gold mining sector at present that you think more investors should be paying attention to.
Well, you know what they always like to say in the gold for gold investors and gold mining investors is it's different this time, Jesse. Um, and so I'll say that with gold, very strange. Yeah, I mean, gold obviously has been on a great run here. It's been trending up for the last few years, really, in an environment where you have had high real interest rates, which is unusual. You've had a fairly strong dollar, which is it's unusual. You know, gold is bucking the trend that it typically the indicators that would usually kind of control the price action. With the mining stocks, they certainly have not really participated in a big way with this move in the gold price. Now, I think those that are starting to act better and move up, certainly off their lows of the last few years, are the producers and the better high quality producers with the lower costs, who a lot of them showed very good earnings. Kinross, even Newmont, Alamos Gold, Agnico Eagle, great first quarter earnings. And, you know, gold's moved up a couple $100 since then, probably on average price. So the second quarter is going to be, I think, phenomenal earnings. And I don't think the market really appreciates that yet. But it's, again, when you say it's different this time, the gold mining investors have been fooled by an early rally many of the last few years. So they're always waiting for that gold mining stock rally to fail. And I think that's one of the things that's holding it back.
Yeah, I want to actually touch on that and get your thoughts on a tweet by Peter Schiff, where he said in a typical gold bull market, gold mining stocks lead the metal higher as investors anticipate higher gold prices. In this bull market, gold has dragged the miners higher as skeptical mining stock investors expect every rally to fail. Gold is climbing a historic wall of worry. So it seems like you're echoing Peter's sentiments there. I'm wondering what you think it will take to overcome that wall of worry for investors to really believe that this bull market is for real.
Well, that's the $100 question, isn't it? Here, I think that, like I said, I think when they start to see second quarter earnings and if the larger companies start to maybe show some kind of return to shareholders with the profits that they're going to be showing, that may help. I think it's again just a skepticism that I think gold stays up here. The miners will participate. Again, that first participation is coming and will continue to come from the actual producers who are making more money at these gold prices. It has not really affected the junior mining space as much because that in that business model, you're not talking about. I mean, gold could be 5,000, and it wouldn't really matter to somebody who's really got a negative cash flow business model like a junior exploration company has. So it's matter of the speculative money coming back into the gold mining business, and certainly there's a lot of competition, not only just a lot of different companies, but in gold mining itself, but junior mining, there's several different commodities that are hot these days, uranium being one of them. And of course, the uranium miners have done very well here at higher uranium prices. But you have the critical metals and lithium and nickel and so anyway, I think that there's a lot of competition out there in the marketplace for several, for that speculative money, and I think it's just going to have to cycle around on the gold side, you just have to show results to get the market's attention and elevate yourself above the crowd.
I had David Rosenberg on the show not too long ago, and he said some things about the gold market have fundamentally changed. The first is that it seems to have decoupled from commodities. It's not following the rest of the commodities. And the other one is he said that normally when there's US dollar strength, you see weakness in gold and vice versa. But we've seen the US dollar and gold go up in tandem together. So in his view, the market is actually starting to value gold as money, as a currency with no counterparty risk. I'm wondering if you're seeing the same things, and if that's the main catalyst you see driving gold moving forward, and any other catalyst that you see that you think could potentially drive the gold price higher.
Jesse, I think that's what I alluded to in the beginning. Now, certainly we've seen record central bank buying, and that will probably lead us into a discussion about the BRICS nation and alternative currencies, and all of which seems to be happening. I mean, the problem that we see in the fiat world of currencies is that the dollar still remains the reserve currency, and if you look at it, the dollar really, when you talk about strength in the dollar these days, it's just the cleanest shirt, right? In the dirty hamper. The the dollar index is really based about 50% on the euro, and then the yen and the British pound. Really, those currencies make up about 80% of the basket. So when you say the dollar's strong, it's relative to the other major fiat currencies. And the dollar doesn't really trade so much because it's the reserve currency and been the petrodollar, as it's described more internationally. We really don't see the dollar being valued with our real trading partners. So take the Mexican peso, for example, which has actually been very strong. The dollar's been very weak compared to the peso over the last couple of years. And, the peso, they're one of our larger trading partners, obviously. So it's interesting when you talk about the dollar and gold's relationship to it. I think central bank buying has had a lot to do with gold bucking the trend. But I have to agree that I think gold is just starting to be realized, not so much here in the West, but by the rest of the world as an alternative. And the Biden administration made a huge mistake when they weaponized the dollar to try and send a message to Russia that about them invading or the war in Ukraine. And it certainly failed. Those kind of sanctions never do really work. But what it's done is, I think, really destroy the reputation of the dollar. And so now you see a lot of the foreign money going into gold, maybe not to necessarily to back a BRICS currency, but just because they would rather own gold with no counterparty risk than U.S. treasuries.
Yeah, well, that's an interesting point you brought up about the lack of participation in the West. I mean, particularly when it comes to retail participation, we've seen outflows from the gold ETFs in the West in quite large quantities. I've spoken to some bullion dealers, and they've also said a lot of people are selling these days. I mean, the speculation there is maybe they need the money. Gold has reached all-time highs, so they're selling. However, we're seeing China, Vietnam, India, other countries in the East buying a lot of physical gold. Obviously the Chinese central bank, as well as Chinese citizens, are buying very large quantities of gold. What are your thoughts on this trend? Do you think this will eventually pick up in Western countries as well? And could that provide kind of the second leg up in this bull market?
When you have a stock market and like we have had here in the U.S. that has, if you're invested in the right stocks, and really they've kind of, there's seven to ten stocks that have really carried the whole market with the S&P. So really, even if you're just in the S&P index, you are owning these stocks like Nvidia and Apple, and in large quantities. I think they make up about 70% of the S&P these days. So that, I don't think that ends well, but I think that's, again, you've just had so much competition. And gold, well, I think it's recognized more and more as money. I think actually always has been, but it still is a commodity. It's an investment, and price brings out sellers. There's just no question about it. But the buying from the central banks and foreigners, and just recently, physical demand in Japan, for example, with retail individuals. The retail market has really exploded for gold in Japan. And then, again, as you see it, I mean, the Costco, of course, has started selling gold, and they can't keep it on the shelves in little 1 ounce bars. So there's obviously some retail demand out there as well. Maybe less so, and I don't really understand the price situation and liquidations that's been happening in the GLD and other ETFs. It just doesn't really make sense to me, other than the fact that people are maybe more, those that are interested in buying gold these days are more interested in holding the physical gold, the coins and bars.
Yeah, absolutely. An interesting point about Japan there. Obviously, the yen taking a complete beating recently, which is the gold is protected the Japanese people's purchasing power, those who hold it. And in many countries, gold was in all-time highs before it reached it in US dollar terms, proving its worth as a hedge against inflation in those situations, and a way to preserve purchasing power. Um, this is an interesting fact I find, is that most people don't even understand that gold is money, which is kind of crazy because it was only in 1971 where officially gold backing was removed from the US dollar, and then by proxy from other nations' currencies as well. And yet these days, most people look at gold as some kind of alternate investment category, a collectible. They just don't have the knowledge that gold has been money for that long. And we've only been living under this fiat currency regime for a very short time in the span of Western history. President Reagan actually campaigned for returning to a gold standard. And there's a quote from him. He said, "Unless we return to some form of gold backing, we'll never have currency we can trust again." Obviously, there was no gold backed currency during Reagan's presidency. But do you think there'll come a point in time where that trust fully erodes, perhaps in the US, perhaps worldwide, and forcing a return to a gold standard? Because we know that the powers that be do not want a gold standard. Do you think that could eventually be forced upon the world, due to a loss of trust in fiat currencies?
Well, that is certainly the trend, and the problem with trends is that while they can be easy to spot, timing of trends can go on. I mean, things can be overvalued for a long time, and they can be undervalued for a long time, and the eroding of confidence in the U.S. dollar is certainly that's happening, and with inflation and the runaway spending that we see in the U.S. and the constant printing of new dollars. I mean, it's a system that needs inflation, to eventually pay back all the borrowings that we're having to do. And we're certainly getting into the point of what some call a debt spiral. I mean, to where, we're $1 trillion a year of interest expense alone. trillion used to be a lot of money. But I don't know that that we get back to a true gold standard where something's gold back. There's just simply not enough gold out there, and I think I saw this. I can't remember the number, but gold to actually back just the U.S. dollar, gold would have to be at much higher prices, over $100,000 an ounce. So it's a trend that's happening. We're seeing, some of the countries that in these BRICS nations, or you hear talk of them coming up with something that's partially backed and with gold or other commodities. And the history of fiat currencies, and now we have this new phenomenon, which is digital money, in not just Bitcoin, but governments, the Chinese coming out with a digital yuan, and we're threatening to do something like that here, where they can really control the money and what you own and even what you buy. That's why the Chinese like it so much. So it's interesting, but it's just very hard to predict, not if, but when.
Yeah, absolutely. That's a very good point. We were speaking about that off camera, how these trends can take much longer to play out than most people anticipate. Let's pivot to discussing Dryden Gold. We did an interview previously, which I encourage people to check out on the channel to get an overview of the company. But for the sake of this discussion, I'd like to start with the results from your Phase 4 drill program at Gold Rock. Walk us through those results and what they mean for the company.
Okay, what we did is, of course, we came public in January of this year, and we actually had raised the money privately. So we started this drill program in November last year and completed it in January. So throughout February, we were actually announcing the drill results. And we did a 4-phase drill program, which, because of the way we did it over the holidays, it allowed the team to get some results. We did about 1,500 meters at a time, 1,500, 2,000, total of 4,000 meters. And we were able to see results and really study the core and stuff in that came out of some of these holes before we decided on the next targets. So what our goal was there first was to understand better the structure of the known high-grade zone, because there was, of course, a phenomenal hit of 53,000 grams per ton in the quartz vein over about half a meter. There's a halo around that mineralization. And in these Archean systems, they tend to be in chutes, if you will, that are where the high-grade gold is. And that might be controlled by inflection in the vein. It might be controlled by some of the regional folding, or where cross structures intercept. All three of those things tend to create these chutes and traps, if you will, for the high grade gold. And so the first holes were drilled into the known high grade zone, and to understand those structures better. And the idea there is then to be able to repeat and understand the controls so that we can predict where more of these high-grade chutes are going to happen. So with that knowledge, we stepped out onto another vein. We've got 3 parallel vein systems in the Gold Rock camp. We call them Big Master 1 and Big Master 2 and the Elora vein. And so we stepped out over from the known high-grade zone on Big Master 2 over onto Big Master 1, and we had a place where the Maura and Anna felt there was that same intersection of the cross-cutting structure. And sure enough, they hit there 26 grams over 3 meters, just in one hole, and that's all we drilled on that vein. We then stepped out over onto the Elora vein with the kind of the same knowledge. There, they were looking at more of an inflection point on the vein, and hit 14 grams over 7 meters. So again, some very exciting intercepts there. And we expanded from one high grade chute to really on one vein to two more on two other veins. We then stepped out to the south about 400 meters and drilled on the Big Master 2 vein, and we we discovered another high grade chute down there, and it wasn't quite the grade, but it was, I would say, 6 meters of 7 grams, something like that. And then in phase 4, we went back and we went deeper on that hole. So we drilled the deepest hole to date, because all of the drilling that's been done here and the historic mining has only been to about 150 meters. And so we drilled down about 200 meters. And one thing we did on that hole is we intercepted both veins, the Big Master 1 and 2, because they're starting to converge together, which is getting very interesting. And also, we sampled everything. So we found that in the hanging wall and the footwall mineralization, which is different, it's not quartz or sheared. It's a sheared volcanic, is what it is, and in basalts, and and we noticed that was carrying gold, and so we had drilled a hole in the high grade zone that also intercepted that. So we were purposely looking at that. And one thing very interesting is that previous operator who did about 20,000 meters of drilling in the Gold Rock camp there, mainly around that high grade intercept, but they did not do full sampling. So they were only looking for the mineralization to be in the quartz and the surrounding halo around that quartz mineralization. And quartz vein structures, they really are. And so we saw, grades as high as an ounce per ton in the hanging wall and footwall structures. So one of the things we're excited about now is that while we finish the drill program and we intend to have another startup again late summer, early fall, in the meantime, we've got all the old core, about 20,000 meters from the previous operator, and we're bringing that into, we've secured a location, we're bringing that in, and we're going to relog that and test that hanging wall and footwall mineralization and really kind of study that and figure out what it is we've got here. Because between that, the sheared volcanics carrying gold is it's typical when you see this kind of high grade gold occurrences in these systems. But it was a very important that at Red Lake, for example, a lot of the high grade gold was actually carried in the sheared volcanics. So we learned a lot with this first drill program, and it wasn't enough to really excite the market yet, but the market just doesn't seem very excitable, and so we're anxious to get that core in, really get it looked at, and start another drill program there.
Great detailed breakdown there. I want to hear about your plans for the 2024 spring and summer work program. What have you got planned? How are those plans advancing thus far?
Okay, so like I said, we've started last week moving this core into our new location. And it's great to have this. We've been, the first drill program, we actually used a outside geological company that helped with the drill program, as well as cutting the core and then storing the core for us. And we've actually secured our own location now, and we'll be cutting our own core, doing everything in house, which will save us some money. But also, we're putting together a program here. We've already got the property that is district size and attractive, we think, to other major and mid-tier companies. And certainly we're on quite a few companies' radar already. And so, that getting that core in and having it in a central location where we can study it, where people can come and see it, and that's very important. I mean, it's a real asset to have all of that core. And so, on top of that relogging program, we've also going to do some groundwork out there. We've got one project outside of the Gold Rock camp called Hinman. And, if you look at our presentation, we kind of the broad picture is we've got Gold Rock and Lower Manitou and Tremblay, and we've really broken that down. Hinman is part of the Tremblay, and it's an area we focused on. It's over to the east. It's on another large cross structure, and just south and east of the Treasury Metals deposit. And that's where we did some initial field work last year and picked up 5 ground samples there. 4 of them were over 10 grams per ton on surface. So we've gone back out there, and one of the things that's happened in this camp, and people often ask, why is this camp not seen so much exploration? And one of the reasons is that the access here has, while the Trans-Canada Highway runs right through the property, and Highway 502 runs from Dryden right down to Gold Rock, once you get out in the bush historically has been pretty rough, dense country. So kind of hard to do that groundwork, and the old timers, it was only the places they could get to on these vein structures that they did the historic mining. But for the last 50 to 70 years, Dryden is a forestry town, and they've got a big paper mill there, and they've been out doing quite a bit of logging. Hinman was clear cut, and it actually, you can throw a rock from the Hinman project to the Trans-Canada Highway, but right off the highway, obviously it was very dense and a lot of cover, and you couldn't see you didn't see the outcropping structures and everything. Now that they've been in there and tore it all up with the logging, we've got road access right in there. The samples we picked up that I mentioned were off of a cut from one of the logging roads, and now we've gone out and found some more outcropping. So we've hired a very special geologist to help us with that, go out and to map that, Kendra Zamet. And she wrote her thesis on the ground there, and very sharp. So we're glad to have her for the summer program. And then on top of that, we'll be going down to the Lower Manitou, one of the properties that we call Sheridan, and doing some field work down there, and also more targeting and field work right within Gold Rock.
Fantastic. Well, last time we talked, we got an overview of the company. We heard a little bit about the team, but we didn't dive into your own background. You've got a wealth of experience in the industry. Talk to us about that experience and the road that led you to becoming the CEO of Dryden Gold, and why you chose this project as something you wanted to take on at this stage of your career.
Well, look, my background is in finance. I spent 26 years on Wall Street, and I'm a U.S. citizen, not Canadian, and got involved in the gold mining business after right around 2003, 2004, and had I was doing analyst tours in Mexico, and got to know quite a few people in the industry, and I got involved with a company called Ely Gold and Minerals, 2010. And they asked me, me and my partner at that time, John Brownlee, to come in and take over the company, and it had a project in Nevada. And John, of course, he was a very famous mine builder, had built, and I'd worked with him to sell his company Capital Gold to, at that time it was Gammon Gold, but became Orico, and ultimately, that's the mine he built for Capital Gold is actually still in production in Mexico. And so we actually partnered up with a company. We got the Mount Hamilton project all the way to feasibility and full permitting. And then in 2015, we sold that property to Waterton Global. And it was at that point when I realized, after spending 5 years, that we had an opportunity to pivot the company into the royalty business. And so early 2016, that's what we did. And we teamed up with an old prospector, Jerry Bachman. Not really that old, but he'd been doing it for so long. I say it's old. And we started doing a business model where we were staking properties, consolidating property packages and selling those and keeping royalties. And then ultimately we started buying some royalties and built Ely Gold Royalties, changed the name and to Ely Gold Royalties. And we built that up from about $6 million in 2016. And we sold that in 2021 for $300 million to Gold Royalty Corp. And so actually at that point I had thought about retiring, and some of the guys from Ely investors came back and said, "Oh, geez, why don't you have one more go at this?" And so I called my friend Mike Tremblay about properties, and that's where I got interested in this Dryden camp, and saw all this property available. Nobody really interested in this camp at all, and except Treasury Metals was up to the north, and they had established a low grade deposit up there. But otherwise, it was a very fragmented camp, a lot of different claims and deals. And even when it was historically mined in the Gold Rock camp, had about 10 or 12 mines in there, all operated by different people. So the patents and everything all had to be consolidated. And we were able to put this property package together. That's one of the things I learned at Ely was that, the best deals we did and the most money we got was, and where we really got the attention of the bigger explorers and producers, was when we really put a significant, meaningful property package together. And some of those packages took us 2 or 3 years to consolidate. And indeed, with Dryden Gold, I started this in early 22. So I've actually been almost over 2 years as a private company consolidating this land package. So today we have over 60,000 hectares, and we think it's very strategic along the main Manitou to Norwich deformation zone, which is, a lot of people compare that to the Porcupine-Dester system fault in Timmins. And again, the geology, and we were able to hire Maura who had left Treasury Metals and had 7 years of experience at Red Lake working for Gold Corp. And so, the team came together, and I guess to some extent I was drugged back in, but I just saw a real opportunity here, and it's starting to pay off. I think that, one of the top explorers in Canada, Kenorland, just took a major position in the camp. And even more recently, Frank Justa's, one of his companies, Black Wolf, has announced a merger with Treasury Metals and putting together an exploration budget there to go back on the exploration side. So a lot of activity now in this camp. And, we were lucky to be there early and establish, we think the key property package there.
Great. Well, Trey, this has been a fantastic conversation. Really appreciated your insight. For those who do want to learn more about the company, I am going to put a link in the description below to the company website, as well as social media. And thank you so much once again for coming on and sharing all your knowledge with the audience.
Great. Thanks, Jesse. Thanks for having me.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.